All right, all right. Hello, everyone. This is me, Guillaume Lambert. I'm here with Rosalie, aka the Crypto Queen. We're here for Stop Losing, Start Trading, the live trading show we've been doing for the past 4 or 5 months now. Again, it's been going very quickly, where we discuss the markets, we discuss trades, we discuss options. This is not financial advice, of course, but this is just our way to kind of talk about the markets and how an options trade could be part of this. We've been doing great lately. We'll see how much the intern's portfolio is faring. The intern listens to our trades, but then it's not financial advice. He listens to it on his own volition. So this is it now. Again, Rosalie, how are you doing today, first and foremost?
Good. Yeah, I'm doing good. Crypto Twitter seems to be a little bit upset today, as always, about Pump.Fun and other ETFs as well. I've seen some news there.
Did you participate in the Pump ICO?
No, I wasn't invited. I don't know if I could have just done it.
Yeah, I think it sold off very quickly. I mean, the I don't know if you heard, but they tried to do a centralized exchange listing and a DEX, and it was like 99% on DEXs. The DEX infrastructure worked perfectly. Centralized exchange did not work at all. But yeah, I haven't looked at the price. People are worried about the price then?
Yeah, I think it's just probably gonna be a little it's down. It's just like a big fumble. Just like always, I mean, everybody that gets in early makes money and everybody else does not. So
yeah, I mean, this was a was a regular company. They had kind of previous rounds, and yes, they launched. It's like every ICO as well. IPO, I'm sorry. It's hard to get the pricing right. The market is always correct. Someone that probably bought at the beginning, now they're underwater, but they maybe have sold along the way. Yeah, and again, I think I don't know if you saw, Pump wants to be the next Twitch, Twitter, and TikTok, or at least so very, very ambitious. I do think that the peak of meme coin mania was definitely the Trump coin, and also the ICO now of Pump might be the top of the meme, maybe a movement. I don't know. It's definitely yes. The price probably reflects how people are feeling about that space.
definitely.
Options on meme coin though, who knows?
Yeah, that's always fun. I think there's lots of things changing in the industry right now. I think with everything that's going on with Coinbase and the ETF. So I don't know. We'll see where things go.
Yeah, the treasury companies. Do you know, or I don't know. I don't know if it's the people that don't have access to crypto, but do you know people that have invested in those ETFs?
Not personally. No, everybody I know is in crypto. So
yeah, even your are your parents trading or on Coinbase, or are they exposed?
Oh, not yet. My mom has been saying that she really, really wants to, and maybe she just like needs to rip off the Band-Aid and do it. But we'll see. We'll see.
Invest all of her of your inheritance money in Pump. How about that?
Yes, definitely. No, in Bitcoin and Ethereum.
Yeah, no, exactly. Bitcoin, you said it, will go up forever. It did go it did go down on the week.
It goes down and up, okay?
What's that?
It'll go up and down.
No, and yeah, 115. That's right. I think this is the same playbook. I don't want to take this like not financial advice, but personally, the way I'm positioning myself. If you look at the past month, increase. Now we're in this like choppy zone where people that now are waking up to say, hey, it looks like I could sell, new all-time high, maybe I buy, maybe I sell, who knows? But that choppy area is what's probably going to be going for the next few weeks, in my opinion. If you go back, it's similar. It was sideways for a very long time, then move, sideways for short stretches and move. So I also am positioning myself now as being delta neutral, capitalizing on the volatility, maybe selling straddles or strangles that will maybe stay in range for the next week or 2 weeks, because I do think the price going up back and forth, choppiness like that, we'll see. The IV is still inflated, and maybe it's a good time to switch to the intern portfolio. But one signal that I'm looking for sure is when I trade, I look at the IV of different markets. And in that case, let me make this a bit bigger. In that case, uh, IV of ETH is 68%. I know the market, so this is kind of on
Wow, that's high.
the every percentile. It's mid to high. We've seen 50, 52 for a long time. Seen 80 in periods of high. It's similar to what we discussed, I guess, on Wednesday. Now 50 and 40 of IV rank and percentile is also a good place. IV spikes, it goes down eventually. Selling options is not worth it, so you just move on. In that case, it seems like the IV is kind of on the upside, and I forgot to look at it, but oh, interesting. Yeah, so it's kind of part of that decision point, which is high IV, sideways markets. Maybe it's a good time to be delta neutral type of way.
Yeah, I would love to put on a new delta neutral trade as well, since it's gonna be the weekend, and next week our show will be a little different.
Yeah, the weekends, I think Trump and the administration has learned from their mistakes of trying to kind of rock the boat with a tweet over the weekend. Because in crypto, we can trade this, it's fine. But TradFi investors were probably very spooked and did not like learning about something on a Sunday and then having to wait till Monday to trade. So I'd imagine that I'm also in the opinion that most of what we expect to see on the weekends is a bit more muted, less trading even, but also less activity. Actually, before we go, I want to show you. So this is your intern portfolio. You have multiple markets. We changed the color scheme a little bit, but we show the utilization in this big number.
Mhm.
And 0% is no investment. 100% is liquidatable, 100% plus. So we added a new feature, and then those that have been kind of poking around might have seen it. And this is where we can also show it. We do show the margin utilization of all accounts. So you go to leaderboard and margin, and you show everyone's margin,
Mhm.
and it goes from 0-ish to like 75%. Oh, Helen Keller, easy. And now we can actually liquidate people. I don't know if it's going to be there, but we were able to flag smaller accounts that were liquidatable. And now anyone can also be a liquidator from the UI. This is Unichain, so no one, some people are close, but no one is liquidatable. And actually, I would not expect these to show up, but yes, if you're on the hunt for some opportunities to make, again, capture a bonus or create some level of return, you can go to that margin and see when people are liquidated. And you can see from like those will never be, but those are 90, 95%, depending on their positions, it could go up. You could be the ones liquidating them. So we've seen a few of them now because the UI is live. So yes, if you're just a trader that wants to get exposure to the liquidation side, then you can certainly look at this and be a liquidator on Panoptic, new feature we pushed.
That is great. Yeah, I think we've looked at this before. I'm glad it's finally live and being used. That's great.
Yes, yes, yes. And there were like, I think there were Sybils, but there were a bunch of them on Unichain. All the same position, all the same deposit size, all the same liquidation threshold. And then, yeah,
Oh,
Lewis from the
interesting.
team liquidated them.
Cool.
Good news that you're nowhere near liquidatable. Everything is below 50%. So now we put that 50% is still green. So maybe we'll have to adjust this. But yeah, this is good. Any one market you want to look at, you said you may want to do a neutral trade, but are you interested in doing the BTC ETH, ticker Bitcoin, Sol maybe?
Yeah, so I took a look earlier. I think definitely we can start with BTC ETH, the ratio trade.
Yes. Okay.
I think, yeah, I mean, overall, I think all these new trades that we put on, they were all fairly bullish. And since the market has been a little bit sideways, I think it's safe to say that for monthly options, it's okay to just kind of wait a little bit longer. I mean, definitely monitor this, but
Yeah.
it doesn't look too dangerous yet.
Yes. And we have the ratio again. It was a neutral put to bullish. So even if it goes down a little bit, we're going to be in range for a long time. And again, delta is 36, so we have the odds in our favor, but yet nothing to do. Take a Bitcoin. Oh, I don't know why everything is open, but yeah, Ticker Bitcoin is also interesting.
Yeah,
Um,
this looks great. I think we have a new range here, a little
yes.
bit more bullish outlook. So, oh, interesting.
Already, yeah, already seeing lots of green.
Hopefully, this will grow and we won't get into the sticky territory anytime soon. So, we'll definitely have to monitor this a bit. But yeah,
Yeah, I think the lowest of the past few months is like, what is it? 0.022. That would be around here. So yes, if we were to retest, yeah, it's not too far, but as long as we're in range, this is good. Um, yeah, ticker Bitcoin. This is a 4-day old position. We we kind of guide the users towards a monthly expiry, but because Bitcoin is so volatile, this is effectively a 2-week expiry because in a weird way, the higher the volatility, the faster time goes. So in that case, 4 days in is great. You would not expect a similar return in 5 days if you were to ETH or the ratio, but here within the next 4 days, we can imagine being fully in the profit. I don't know what the term is, but then like having this be all in green is where you want to be. So that could happen much quicker for volatile assets like Ticker Bitcoin than ETH or even like ETH Eigen, for instance, or some of those that are very correlated.
hmm yeah, I would love to see the USDC ETH positions as well. Yeah, I
Actually,
mean,
let's
this
get
one,
it sold. I think
yeah,
let's see if it's still in range. So this one was a bet on the ratio of Sol to ETH recovering a little bit. Yeah, okay.
I saw the delta said 1.02. Is that a clear indication that we're out of range?
Yes, and the real one is the spread value. So I'll show it also on the main app, but on the main dashboard. But here the spread is 0 because we're not paying or earning anything. Uh, it did pump a little bit, but it went back down. So that might be one where we could consider rebalancing
hmm
and maybe still being maybe bullish, but then still moving in range. If it were in TradFi, currently the put option is the one that is in the money. The call benefits when it goes down. So technically the call worked for us, made us a nice profit. It's the put side that's in trouble. So what you can do in TradFi is to roll the call up. So you can actually realize that profit on the call side and move it back in range. Here, it could be also something we do where we don't have a straddle where all strikes are together, but rather have one which is a bit wider, still capturing the same upside like price, but also have maybe another leg which is downside down here. Might be something we do, but it's a small-ish position. I don't think it's going to bankrupt us, but yeah. Again, being a month in, I'd say that yeah, it's been out for a while. Now it's still out. Well,
Yeah, I think we can definitely reposition this.
okay.
I'm not sure what's going on at Solana. Yeah, I would have expected it to be a little bit more bullish this past weekend.
I don't know if the pump. So ICO mania, it's like what drove a lot of the growth to ETH was people selling their Bitcoin to buy ETH to now buy these like ICOs in like 2017. Solana, I don't know if people bridge to buy the pump ICO. I could imagine that
Maybe.
the price could have been like the or maybe the Solana founders sold some of it. But yeah, the ecosystem is already closed. I don't think it attracted new entrants for that specific ICO. And they had still lots of things going for them, but the meme coin narrative is playing out for sure. So it's just kind of any token. Like if it's bullish, it's because people are talking about it and doing a lot. If it's somewhat bearish, that it's like not doing much. But yeah, I would say that it's fine. They I would not expect Sol to go to 0 ever. I would not expect ETH to
No.
go to 0. They have a ratio, and it's just kind of trading this. So
Yeah.
all right, ETH USDC. Oops,
Yeah. Yeah. Interesting. Our new trade seems to be already accumulating for us.
printing.
Yeah,
So
printing. Wow, look at that. 2 days.
no, yeah, we have two. We have two bullish trades, one bearish, and again, we can see from this price went down. So I would imagine that this is why this specific trade is earning, moving a little bit. This
Interesting.
was yeah.
Yeah, we have a nice little added spread there as well. Oh.
Yeah, so a little bit of spread. We're sold to a position that has a lot of liquidity.
Mhm.
48 ETH. And again, I'm bad at math, but 48 ETH at 20. So this is like $170,000 worth of liquidity. 48 ETH. We sold a little bit, someone bought. That's why we have a slight positive. Um, but yeah, this is a massive strike. And then we're just kind of possibly. Again, guys, call side has a lot of liquidity. And you can buy calls somewhat cheaply. It could be in the money, it could be in range. But you can buy 2, 3, 5 ETHs and not push the ratio too much. So you can imagine that you can buy call option for what would be much cheaper than you would get on Deribit. People might be selling covered calls, or it could be a market maker, but the key point is a lot of it. This is 48, this is 60, 60. So that's also something that if you want to be speculating, you can buy calls, you can buy call spreads, you can do a lot. And then this is one of the trades we're doing here is also a call spread. But yeah, if you want to tap into, in a weird way, cheap options that may be costing you less than Deribit, then yes, ETH USDC definitely has a bunch of those available.
Do you want to set up another delta neutral position for
Yeah.
the weekend?
Sure.
Okay.
So we're at 46. I would say
Mhm.
we can push this a little bit. We can look at the whole P&L. And depending on how we want to look at this, we can look with or without the deposits. But I think now we're, interesting. Yeah. So we had this and a call. This is kind of the payoff. If we include the deposits, then it's skewed because we do have a bunch of ETH. But if we just look at this is interesting. This is like a call ratio spread, if you want, in terms of like payoff. But we're profitable within now and 56, 57, so definitely bullish. If we were to do a neutral, it could be neutral to bearish to maybe enlarge that P&L a little bit. But yeah, actually.
Yeah, I think that's kind of what we were hoping to do with that call as well. Just kind of move this graph a little bit more, and we have now a little bit better capped
Yes.
losses. But yeah, definitely another bearish to neutral.
Okay, yeah. And again, this is when you're managing a portfolio of many options, you don't look at each one individually, you just look at the whole portfolio together. In that case, might want to get a little bit more of that enlarging the P&L, creating something a bit more bearish. And in that case, I would also recommend a straddle, depending on how. Do you want to keep a monthly expiry, which means we'll have to look at it in a couple of weeks, or maybe go to a weekly one and have something maybe interesting on Monday?
Is there any interesting liquidity there? I think maybe I would prefer something where we could earn a little bit more.
Yeah, these two have, depending on how big we are, tiny bit of buying pressure, and the multiplier is more than one. I mean, again, look, 80 ETH and 300K worth of puts. But yes, that could be one. We are also pursuing. That could be one, but I would say that we can even just be doing our own thing, moving to a strike, which seems to have some neutral to bearishness to it. And then we can have the break even be between, I don't know, 34 and, the range between 3,000 and 3,800.
Yeah, that looks okay. Especially for just a week, maybe this will help us accumulate fees a little bit faster.
Yeah, and I would imagine if it goes back to 3,500, it's fine. We gain a little bit, but then otherwise we're earning fees till it's 3,800, 29. So things good. And let me
Yeah,
get
definitely.
this.
Let's post the link.
Let's do it. Yeah. So this is the neutral to bearish straddle that in turn will, or rosely engineered, and then in turn will implement, maybe or maybe not. Again, I don't want you to copy this, but at the end of the day, the way we work is that pasting a link on the UI on your browser brings you to that page where you can create the same one as well. And yeah, I think that's it. So we look at our markets, everything's good. We can manage and wait for the newer trades. This one will also kind of shade the portfolio. The sizing might be the last thing that intern will have to figure out so that you don't go too high, but I would say between 50 and 60% is still manageable. because we have two defined risk strategies. So this is also one undefined, which is the call to define. So the defined one will not even get you liquidated ever, almost, because the buying power is used and it's like not going to change over prices. So that's okay. We can go a bit above that. So this is also another tip. So yes, let's bring in Brendan for second half of the show, which is also how can we engineer or re-engineer what looked like a pretty good trade that we saw this week. Yeah, all right. Thanks, Rosalie, and yeah, hopefully Monday we'll see some juicy returns there too.
Sounds good.
Right, bye.
Sweet. Welcome to the second half of our Stop Losing Start Trading show, where we're going to go over the best and worst trades. So yeah, we had some pretty good trades put on over this last week on Ethereum mainnet. Some very interesting options that I'm excited to share with you here from our research team analysis. So let's take a look at the first one here that is netting a 312% APR, and this is after losses. So this is fully netted out. So first of all, Straddles, very popular option strategy.
Wait, yes, there we go. Yep.
Yeah. Here we go. So yeah, here's the Panoptic UI. You see this trade was put on by one of our users just a week ago. It's currently making 6%. So if you times that by 52 weeks in the year, you get about 312% earnings here. And Straddle is composed of a short put, short call. As you've seen, the intern has put on many of these trades. It's a great way to farm the sideways
and look
markets
at
that have happened.
We're $1 off of their current their mid price too. So this is kind of starting at zero. If they were to redeploy, they would probably do the same thing, so they could keep riding it. Interesting.
Yeah, it's kind of magical. The price is like basically right back at where they started a week ago. So the true definition of a sideways market, if there was one here. A very nice position is a big position. It looks like over $500 million. The collateral requirement was less than a quarter. It left quite a bit of leverage. And
Brandon, can you hear us? We see your cursor, but then we don't hear you. I don't know about Rosalie, if you can hop back in, but yeah, this is one of the trades we just looked at now because we almost created a overlapping trade with Rosalie. This is in the weekly time scale. This is quite a hefty bet, but it's actually been, again, quite profitable given that it's been week old and it's earning 6% in a week. This combines the heightened volatility we've seen over the past week, but also the price being choppy and moving back and forth. I would imagine that the price stayed in range the whole time. I don't think we went above 4K or below 3,000. So this is a good trade in terms of the how it's executed and how it's, again, they haven't touched it because they did not need to, but yeah. Now they are at this point where they could almost keep it on, and if it leaves the range, they would lose way, way less than they would have. But yeah, this is actually a very good trade. Brendan might be still... wait, can we do this? While Brendan appeared. Is this one of you, Brendan?
Yes. Can you hear me okay here?
Yes.
You might have to mute my other one, but okay, perfect. Sorry, I'll be the faceless voice of a description. But you went over this trade really well. Yeah, this has been netting some really good fees with the sideways market. As you see, the price has barely moved, and it's earned over almost $12,000. And if we take a look at that spread, you see here, maybe I can zoom in a bit. We see that it's currently at 1.011x on one of the legs, which means it is earning about 1% more than it would in Uniswap. So could be higher, but it is quite a large position. So as more people pick the other side of this trade, buy some options on Panoptic, this is a lot of liquidity. Nearly $250,000 of liquidity sold as a put. So someone could buy a put here. And that
if
would
you look at the trades, that whoever's buying it is actually like it's still at size because there's so much liquidity there. You can buy, in that case, I think I saw $36,000 worth of, or $20,000 worth of notional, and you don't even move the multiplier. So this is actually a very good trade if you want to kind of tap into that liquidity. And yeah,
exactly. Lots of liquidity here to buy some puts, and as we've seen, someone bought up about 60,000. What is this? 50,000 worth of it's about $60,000 worth of puts. Two people here, bumping up the Uniswap fees to about 1% extra premium here on Panoptic. So this user is making a little bit more than they would be making on Uniswap. So everyone here seems to be happy, except maybe the put buyers when the price hasn't moved yet. But great trade here as far as maybe getting lucky with the price not moving, but that's exactly how the straddle outperforms is cases like this.
Maybe they if they were neutral, then yes, they were exactly right, and this is the best way to see this. And
Sweet.
if you're at this size too, I would imagine that you have other means to hedge. It could have been like you could buy an option, say on Deribit, that is preventing you from like bleeding too much if it moves. But yeah, this is kind of institutional, not quite institutional, but like quite size meat is probably a sophisticated player, because if the price does move back to, as you say, 2,500, they lose 75K.
Yeah, and if you were to hedge this position off chain or on Deribit, as you said, could you explain a little bit about what that hedging might look like for a position like this?
Yeah, it's hard to, like, you would buy protection. So you can set up iron condors, or you can set up calendar spreads. You can actually protect your the long tail moves, and in that case, it's probably going to be buying much longer dated options. It's a weekly option, maybe you buy monthly or even like 3 months in the future, and that is protecting you for these maybe more black swan events. So you would have it could taper off, and you have something that's flat as opposed to going to zero in either directions. And I'm sure that this account probably has more than one position, so you would not look at one hedge per position, but rather your whole portfolio. You have weekly, monthly, maybe daily options. You hedge with one or two larger trades, and this is kind of how you, even if you're at an options market making desk, this is your requirement. You have to, it's called like, balance your gammas, but reduce your gamma risk by buying options.
Sweet, makes sense. Sorry, we're switching over there to try to show you a hedge, but yeah, it sounds like if you have something like a, let's rebuild this, right? So they had a 36-12 strike straddle here.
Yep.
And you want to buy some protection. You could buy on the. Would you recommend like buying on the wings?
Yeah, that's right. But I would buy it, but also change the expiry. So that might be a bit like, but yeah, you would probably put in a call, and if you go auto snap off, you can kind of move in wherever you want. But you would create something that is, again, managing that payoff to make it less scary, because it is scary seeing losses on both sides. In that case, I would yearly even. No,
Okay,
yes,
so
buy the yearly option. Yes, and then you can do this on both sides. But yeah, the key point is you want to create some level of protection, not on the red, but something like this, where as you go further out to the edges, black swan event, it rips to 10K overnight, or it goes back to $500. You have some protection because you cannot have like more than the loss of what's shown there.
Okay, very nice. And is the reason for buying the yearlies on the protection side because they're supposedly a bit cheaper as far as the premiums go there?
Yeah, the liquidity is wider. The liquidity is diluted if you want, and also so you pay less per block. And if you look at most options chain, I don't know how it says it over time, and I'm sure Nathan has the word, but at a given expiry, the at the money volatility is lower than out of the money. You have kind of this smile or smirk, but the further away you are from the action, maybe the more willing you are to pay a bit more for protection. So you have this smile at a given expiry, and say the weekly expiry has always this smile. More expensive in terms of IV along the edges and near the current price. Same thing happens with the IV at different expiry. So you have the at the money option. The very, very short dated option typically has a much higher IV. The daily to weekly to early monthly, they have a lower IV, but then as you go up to yearly leaps, like 1 year, 2 year, now the IV also picks up. So it's a weird, like two-dimensional surface, again, fall surface, but is more expensive on the edge of the pricing, but also more expensive the longer away. So thinking about what we know about Uniswap LP and kind of options, if you buy a yearly option, you pay realized vol at the current price. So it's doubly advantageous because you are underpricing it in terms of the fees you pay, but also in a normal scenario, the longer dated will also have a much higher IV. So a multiplier of 1.2, 1.3 could be what the fair price is, but then you pay only 1.01 or something. So it's all about kind of as the traders and protocol matures these inefficiencies. Again, you may have to wait a year for it to realize. So we've been launched for less than a year. But yeah, if you are serious about market making, there are these opportunities for buying cheap options in the wider, longer dated areas, but also cheap options on the further out of money regions.
Sweet, makes sense. So you take these two protected options to protect our portfolio. You drag them out maybe to the far side.
I would use the other one to still be in range a little bit because that could be force exercising you but yeah, anything that you can do to smooth out. And in reality, it would not all be red now. It's because it's kind of a Frankenstein position. But yeah, in Italy, you would have some green in the middle and some protection on each side.
That's right. This is probably underestimating the premium you'd make here in this preview. But key point is here you got some nice protection on both sides. You can check kind of each of your legs. You see this is a 1 year on the +1 put, which means we're buying the put. This is a +1 call, so we're buying the call. Also at the yearly, whereas the maybe original position I think was something closer to a monthly. But yeah, so thanks for walking us through that kind of hedging tutorial of this position, which may or may not be hedged off chain, but it is doing very well on its own here as far as capturing the sideways markets. So anything else to reverse engineer here about this straddle, help us better understand it, or you think
that's right? So I think the entry point, I would say a week ago was mighty risky than now. Again, it was in the midst of that mini bull run, putting it on again. This being sophisticated, probably also saw like in the tea leaves that we're going to consolidate for a little bit. And yeah, no, this is good. I would probably keep this on. I'm personally not hedged off chain, so depending on the sizing, I would also keep this between 5 to 15% of your total buying power. But yeah, if you are able to hedge, you can go higher. But yeah, in terms of sizing and execution, this is great.
Sweet. Yeah. And then when I first looked at this, I thought that the price had moved a bit just because their net P&L was a little bit less than the fees they'd earned by about 1,270. But I realized this is just the kind of the maker fees that you have to pay on Panoptic. So when you open the position, you pay a 20 basis point fee. This is a quite large position, over $500,000. So they paid about $1,200 or so, and they don't have to pay anything when they close this position, which is nice. But so far they've earned way more fees in the last 7 days than they have paid. So very nice to see here with this straddle and a good idea of what it can do in a sideways market. Of course, at the time they opened it, things were a little bit more volatile. Prices were moving up quickly, and it turns out the realized volatility has been much calmer than perhaps expected. And so good trade here to capture that. We can take a look at another position as well that I want to cover. And this has to do with force exercise, interestingly enough, which is kind of a unique function in Panoptic with these perpetual options. So we'll switch over to this tab as it loads here. We'll give it a second, but let's see if we can populate that on the screen here. Let's see. I might have to reshare my screen here.
Yeah, let me know if I think I have to simply let me know if you want me to share my screen if you can get it. But yeah,
Sure. Let's see. Right. Let's try again. Okay, a little bit of a delay there. Looks like it almost got to us. But yeah, forced exercise. I'll talk about that while this populates on the screen here. So there are perpetual options. So if you buy an option, you can be forcefully closed by the seller of the option. They do pay you a fee though. So if you buy an option and you're forcefully closed, you earn a little bit of a fee. As you see here, the fee was pretty minimal because this is a decently small size
this is a
position.
huge size. This is one of the things that we haven't seen often, but the fee is actually tiny, right? It's $20,000, $30,000 worth of capital, and it's only $1 worth of fees, forced exercise fee. Do you know why it's that?
Yeah, so let's analyze this a bit further. We have a well, first of all, the forced exercise fee, is it paid on only the long leg or is it paid on the entire position?
Only the long leg.
Okay, so we got a $13,000 put option that someone bought that was forcefully closed. It is quite out of range at the time this was forced exercise. It looks like the price was 3,600 at ETH, which is around where it is now still. But the strike of this put option was quite what is this? Out of the no, this was quite in the money, right? So quite far away. And so I'm guessing it has something to do with how far the strike is from the price that it was exercised at. But why don't you go into the details of why is this so cheap to force exercise?
So when you buy an option and it's in range, you buy an option, the seller is making money. You cannot force exercise or get it away from that position. You can reduce that size, but if you're in range, you cannot force exercise. The second you go out of range in either ways, now the seller technically is not earning anything. They have the right to force you to close your position. If it's one tick outside of range, you pay 1.28% in fees. 1.28%. So this is, maybe we'll change it to V2. This is maybe on the higher side, but it's a price to pay. You pay 1% of notional. In that case, they would have paid $130 to get rid of that position. But we decrease it the further away you are. So it's like an exponential decay. And if you're 1 width, 2 width, it goes down. And in that case, it's 1 basis point. Instead of being 1.28%, it's 0.0128. So it's 100 times less, meaning that they have you've decreased. So this is cheaply to expire because it's so far away. The seller now is deeply underwater. So we make it cheap. Diminish price to force exercise, you just pay the gas. So the stuff we're doing even with Rosalie, where we buy an out of the money option, in that case, I think you're back. Are you back? Yes. Hello, Brendan. If you buy a out of margin that's too out of the money, they can be exercised for cheap or exercised without even paying for it. In V2, we'll probably make this even steeper because now you have to wait something like 20% out, which is what it is to pay 0, but in reality, it should be much higher. It could be done earlier. So, but yeah, cheap for exercise. That person profited for, I don't know, 9 hours. They made 5%. They still made money, but then the exerciser paid cheaply, made it so that they realized their profit against their will.
Yeah, they were caught, in their kind of trick here of buying an out of range option. So basically a free option on Panoptic, but it did allow them to set up this really cool diagonal spread. I believe this would be called. Is that right? Where you buy a short put, and also, sorry, you sell a put and you also buy a put. They're at different strikes and they're also at different expiry kind of time scales.
Yeah, and I would probably imagine that person could have just sold that put option, sold it exactly the same risk, but now because they had this cheap option to buy, you can limit your buying power, you can cap your losses, coming for free as much. So I would not think that this was kind of necessarily meant for a super weird diagonal spread, but rather they had a position in mind that was a put, thought was bullish, it did move up, but then that free option gave them protection, but then the flip side of that is that they got exercised early, and had they not kind of been exercised after 9 hours, they probably would have earned another like 5-10%, or maybe like 5% of fees over the few days.
Yes. So there is a good trade-off here of buying free options. They allow you to be forcefully exercised. Yes, you earn a fee, but the further away your free option is, and also it's per width, right? So this is a daily option, which looks like it's about $200 wide. So every $200 interval from the current price, it makes the force exercise cheaper.
Yeah.
And so people are incentivized to close you out if it's.
I think the V2 version will be that you probably pay 0 when you're either one full width or even half a width away, as opposed to paying 5 of them or 6. But so yeah, I would imagine that this is one of the things that it's fine, but then through feedback we realized that was slightly less optimal. But you would initially want to be able to exit these for free most of the time if it's out of range by kind of reasonable amount.
Yeah, and this was quite cheap to exit, but nevertheless, this spread has done decently, and did earn that exercise fee despite it being quite small. So not a bad trade, nevertheless. But good way to understand the nuances here of some kind of niche features of force exercise.
Engineering I think this was probably the cheapest force exercise fee in the history of Panoply. I don't think I've seen anything lower, but yeah, it could have been 0, maybe a few more widths apart. But yeah, now this is the minimum one.
Okay, well, hopefully a little bit of a tip here for our more advanced users. Now we'll switch over to the worst trade of the week on Ethereum in the ETH options pool. So sharing this tab here now, which happens to be quite the opposite of the best performing trade.
So that's the other one, the other buyer, I guess. Was it also 7 days ago-ish?
That's right. Yeah. So this is also 7 days ago. But I looked, these are two different users. So they weren't buying up their own position.
Sibbles. Yeah, no airdrop farming maybe or whatnot.
But that is a good tip if you want to farm. Yes, you could do that.
It is a bit weird. If it's hedging, I would doubt this is it because it's still narrow. This might have been more speculative. Last week was indeed after the bull run. You could imagine, all right, maybe it crashes, maybe it goes up. That type of options buying, I would say, yeah, likely not hedging, but rather speculation. Did not work out. They paid 20%, $800 in fees. That I don't know how long they could keep going, but yeah, I would say this is probably not the best outcome for sure.
Yeah, it's unfortunate because we were just talking about how options are cheaper on Panoptic, but they are relatively. But
no, but if you do this, I think they pay 4% more, and I think that's still maybe reasonable. But the market move, if you do this almost mechanically every week, because you pay less versus paying more, you could be net positive. There's always these huge moves. This is buying. Remember, selling, you want to secure 10 wins for every loss. Here, as a buyer, you lose 10 times, and the one time you win big. So I wouldn't fault them at like, oh no, don't buy options. It's just they're playing the game a little bit against it didn't work well. But yeah, it could have gone the other way, and this would have been the best trade if the price went back up to like, I don't know, 4K, maybe not 4K, but yeah.
And just to explain a little bit for our users about the 4% more expensive that we mentioned here. So that's specifically 4% more than the Uniswap fees of these underlying positions. So if you see here on this more detailed chart, we see that the put leg of this position. So this position is built out of buying a put and buying a call. So the put leg is currently charged about 5.7% more of a premium on top of the Uniswap fees owed. And the call leg is charged about 2.2% more of a premium. So if you average those out, weighted by their leg size, which they're the same size, you get about a 4% effective spread here. So that's basically saying you're paying about 4% more in the Uniswap fees, which still might be cheaper than what you're paying on Deribit for something like this, based off of our IV analysis previously. But yeah, the price has not gone according to this trade. But as you said, a lot of these buying option trades is you're hoping for the one big win, which so far this one has not materialized. But
this was a bit
the
like
universe,
non-committal. If they were bullish, they would have bought a call. If they were bearish, they would have bought a put. They would have paid half of it. But now it's like non-committal. We pay twice over. You have less risks a little bit if you're like, but yeah, now we're back at the lowest of the low. So, I mean, this is it. I'm sure a few weeks from now, a similar trade could be the best one. Who knows? But yeah, I do have to run actually. So this was great. Rosalie and I had a good discussion. We'll see if intern listens to us, but otherwise, thanks Brendan also for creating this. I don't think we had time to go over the trading competition. Maybe we'll do this next week. But yeah, we had a competition that ended on Unichain. Or at least
that's right. Yeah, prizes will be distributed soon, so you'll get your points on the leaderboard after our update, and then we'll be sending out some of that USDC and Farcoin to your wallets that you've provided us. So, yeah, stay tuned if you won. Congratulations.
Yes. All right. I gotta go. But yeah, this was great, everyone. A nice live show. Again, we'll see you next week.
Awesome. Take care.